Hey there, welcome back to my channel, it's me the Mind Injector. In this video we're talking about NIO, the Chinese EV maker that just got slapped with some high tariffs in Europe. Stick around because you won't want to miss the juicy details and what this could mean for NIO's future. NIO stock has had a rough ride, declining nearly 60% over the past 12 months and trading almost 30% below its IPO price. The company has been grappling with supply chain constraints, tough competition, and persistent macroeconomic headwinds. But NIO has always stood out from the crowd with its innovative swappable batteries and ambitious expansion into Europe. So, what's the latest? Just recently, NIO faced a significant hurdle as the European Union imposed higher tariffs on Chinese EVs starting July 5th. These tariffs range from 17.4% to 37.6%. Depending on each automaker's subsidies, pricing strategies, and compliance with EU regulations. NIO was hit with 20.8% tariffs, which will now be charged on top of the existing 10% import duty for EU-bound Chinese EVs. That's a substantial increase and could impact their pricing strategies. Despite these challenges, NIO has stated that it will maintain current prices for its cars sold in Europe. However, they haven't ruled out the possibility of raising prices later in response to these new tariffs. Let's take a closer look at what NIO's plans for Europe were before this tariff news hit and how they might adjust moving forward. Over the past 3 years, NIO has been steadily expanding into Europe with 6 models. They've also built 43 battery swap stations and 46 charging stations across Europe, providing access to more than 500,000 third-party chargers. In 2022, NIO constructed its first overseas battery swap station production plant in Hungary, and just this April, they opened their first overseas smart driving technology center in Germany. NIO has invested heavily in its European presence, building 7 NIO houses, 8 NIO spaces, and 55 NIO service centers across the continent. These spaces have hosted over 1,450 community events for NIO drivers since 2021. Despite the new tariffs, CEO William Li has made it clear that NIO will continue to expand across Europe. While the higher tariffs pose a challenge, manufacturing vehicles in Europe could be a potential solution, though the higher production costs might offset any tariff savings. For now, NIO plans to strengthen its partnerships in Europe and scale up its operations to a level where manufacturing locally becomes viable. However, Europe remains a relatively small market for NIO, with only 100 vehicles delivered in 2021 and 1,296 in 2022, compared to its total deliveries of over 90,000 in 2021 and over 120,000 in 2022. NIO delivered over 160,000 vehicles in 2023, but has yet to disclose its total shipments in Europe for that year. A report from the German Federal Motor Transport Authority revealed that only 48 NIO vehicles were registered in Germany in March. Clearly, NIO's focus must remain on stabilizing and growing its primary market in China. NIO's delivery growth slowed to 34% in 2022 and 31% in 2023. A significant deceleration from its triple-digit increases in 2020 and 2021. This slowdown was mainly due to macroeconomic challenges and increased competition in China, not necessarily its European expansion efforts. China's economic slowdown has impacted consumer spending, while Tesla's aggressive price cuts have ignited a price war among Chinese EV makers. As NIO's vehicle margins shrink, its operating expenses have climbed due to the expansion of its battery swapping stations. On a positive note, analysts forecast NIO's revenue to rise by 23% to $9.4 billion for the full year, as the company focuses on higher-end vehicles like the new ET7, the expansion of its battery swapping systems, and the introduction of its lower-end Anvo smart vehicle brand to counteract spend. Based on these expectations, NIO's stock looks attractive at less than 1 times this year's sales. However, analysts also expect NIO to slightly narrow its net loss as it continues to expand its capital-intensive battery swapping network across China and Europe. The higher EU tariffs could exacerbate that pressure if NIO decides to absorb these costs to maintain its presence in the region. Before we get into the exciting details, let me introduce you to Moomoo Financial. If you open a brokerage account with Moomoo and deposit at least $1 using the link in the description, you'll get a chance to draw a free stock worth up to $2,000. But that's not all. If you make a net deposit of $100 or more, you'll receive not just one, but 5 free stocks worth up to $2,000 each. And if you're really serious about investing, you can deposit $1,000 or more and get a whopping 15 free stocks, bringing your potential earnings to a staggering $30,000. So sign up now using the link in the description and get those free stocks. Now let's get back to the video. So, should you consider investing in NIO right now? Well, if you have faith in NIO's potential to tackle its challenges in China and grow its business in Europe, it might be a great opportunity. For those willing to take a risk, this could be the right time to buy. However, keep in mind that NIO's stock might continue to face difficulties until it improves its vehicle margins, reduces its losses, and demonstrates successful expansion in Europe. Moreover, ongoing trade and geopolitical issues could continue to impact its valuation for the time being. Despite the obstacles, NIO's business model, particularly its innovative swappable batteries, continues to set it apart in the EV market. As NIO navigates these challenges and aims to return to profitability, the company's resilience in vehicle deliveries and expansion efforts will be key to its success. The potential for NIO to grow, especially with the anticipated 20% increase in revenues for 2024, supports the view that the company is on a path to recovery. In conclusion, NIO's journey is far from over. The company has shown significant growth and innovation in the past, and its commitment to expanding in Europe and launching affordable EV models like the Onvo brand demonstrates its strategic foresight. For investors willing to ride out the volatility, NIO presents a unique opportunity in the evolving EV landscape. This is it for this video, guys. Thanks for watching, and please make sure to subscribe, like, and leave a comment down below.